In this video, I'm going to be sharing with you how to handle drawdowns in Forex trading. The truth is that in Forex trading, there will always be drawdowns, and handling drawdowns effectively is a crucial skill in financial trading and investing. So, here we're going to be looking at the structured approach to managing drawdowns. So, if you're currently in a drawdown, then this is just for you. Number one, you need to understand drawdowns. By definition, a drawdown is a decline in the value of your trading account or portfolio from its peak before recovering, and it is typically expressed as a percentage. So possibly now you're managing your account, you're managing your portfolio, maybe $10,000, $100,000, and suddenly you discover that you have some floating negative trade, maybe a $5,000 minus or whatever. That is what we call a drawdown. It's a trade that is floating, that is yet to be closed, negative floating trade. So it is usually expressed as a percentage of the account. So if you have a $100,000 account, for instance, and you have a minus 10,000 negative floating trade, then that means you have 10% of your account, as drawdown, that is at risk. Now, there are two types of drawdown. There is the normal drawdown and there is the abnormal drawdown. Now, normal drawdown can be referred to as short-term fluctuations within your strategy's expected range. Now, when you open a trade, your trade is not expected to just go from entry and go straight to its profit. No, it doesn't happen like that. The reason is because price always fluctuates in the forex market. In a bullish trend, price makes a series of higher highs and higher lows and on like that. So during that period, when price is not going, that most slightly against the established trend, it is called a retracement. So normal drawdowns are actually retracements, which are allowable within a particular trade before the trade, hits the profit level. You understand? So this is called a normal drawdown because it's a short-term fluctuation. Now, abnormal drawdown is extended losses that indicate a potential issue with the strategy or market conditions. Many times when you have these abnormal drawdowns, then probably there has been a complete change of trend. It's no longer a retracement, it's a complete reversal of trend, and that can put your account in abnormal drawdown, which can be a very, very risky situation to find yourself as a trader. Number two thing to note is to pre-plan for drawdowns. Like I said, drawdowns will always come. So psychologically, you need to prepare yourself mentally. You need to prepare yourself for drawdowns so that when it comes, you are not caught unawares. And how do you do that? Number one is that you set a risk management framework. Define your maximum acceptable drawdown. So before you start trading, you need to determine what percentage of this account can be in a drawdown. Either a 10 or 20% of your account value, it should not exceed that can be at a drawdown. Number two to note is to use position sizing to minimize the impact of losses. Always apply position sizing. Know the percentage of account that is at risk per time using position sizing model. And number three here is to diversify your portfolio to reduce exposure to any single asset or trade. So what we're saying here is that don't expose your entire account to the risk of just one particular financial asset. If it's a currency, not just one currency pair, trade multiple pairs so that way you can diversify your portfolio and reduce your exposure to a single asset. Next thing is you need to develop a strategy. Backtest your strategy under different market conditions to understand its drawdown potential. See, in the course of backtesting, you can know the drawdown potential of the strategy you're using, and that will help you to know whether you should stick with that strategy or not. Next thing you need to know under developing strategy is to create a plan for scaling down or pausing trading if drawdowns exceed a threshold. This is very important. You need to have a plan in place to scale down your drawdown or to pause trading if the drawdown exceeds a particular threshold that you have predetermined, earlier on. Number three thing to note is to monitor and analyze. Monitor and analyze, track performance. Keep detailed record of trades and performance metrics. Use tools to calculate and monitor. Use tools to calculate and monitor your drawdown percentage regularly. And also, you need to analyze causes. What caused the drawdown? Is the drawdown caused by normal market fluctuations, or are there errors in execution or deviations from your strategy? As the market environment shifted, making your strategy less effective. Sometimes when you have your trade running and some highly volatile news event takes place, it can potentially put your account into an abnormal drawdown. So these are things you need to analyze, by understanding what caused the drawdown. Number four, adjust during a drawdown. Now, this is very, very important. And the first way to adjust during a drawdown is to stay disciplined. Discipline is a key factor if you must be successful in forex trading. Stay disciplined. No matter what is happening to your trade, no matter what is happening in your account, always, remove emotions by being disciplined. Avoid emotional trading or doubling down to recover losses. Now, what some people do is that when you discover that they're already in a drawdown, then they start opening other trades and they want to trade aggressively in order to recover their account back. That can backfire. So you need to avoid emotional trading. Next is that you need to stick to your predefined risk management rules. No matter what is happening, no matter the level of risk, the exposure you have, make sure that your risk management rules are in place. And the third thing you need to do if you find yourself in a drawdown is you need to lower position sizes to preserve capital during high volatility. So when there's expected volatility, possibly during a news, you need to lower your position sizes. If you want to open other new trades, make sure you're not trading a high lot size again when a percentage of your account is already at a risk with a drawdown. It's not, there's no wisdom in it. Don't keep opening trades with a high risk again when a percentage is already in a drawdown. Limit the frequency of trades to focus on high probability setup. So the time when your account is under a drawdown is not the time you want to take every random trade that you find, because if that happens, you may end up increasing the drawdown, because if you keep having losing trades, then your risk limit is getting higher. So only trade high probability setup in order to reduce your risk. And also, you need to reassess the market. Do a reassessment. Review market conditions to see if your strategy needs adaptation. Go back on the chart and reanalyze the market. Know where the problem came from. Know where the market is going next, because that can really help you to know what next to do. Consider pausing or edging if conditions are highly unfavorable. So if the conditions are unfavorable, then you may just have to pause your trade and just watch what is going to happen. Leave the trade running and watch. Or then you may also adopt the option of edging. Edging means you're opening a trade in the opposite direction to the one that is in a drawdown, just to limit the risk on that particular trade. Number five is psychological management. Always maintain perspective. Understand that drawdowns are part of trading. It will come. Focus more on long-term performance. You see, if you want to stay long in this business, your focus should actually be more on long-term performance and not just the short-term results. Avoid letting drawdowns erode your confidence. Don't let it erode your confidence. You are not the first person to have a drawdown. It has happened to thousands of traders. So don't let it erode your confidence. And also take break. Always learn to take break as a forex trader. Don't always get stuck on your phone or your laptop trading all through the day. Learn to take breaks. Stay away temporarily to avoid making impulsive decisions. And also seek support. Engage with trading communities or mentors for advice and encouragement. So if you ever find yourself in a drawdown, don't just try to bear it all by yourself. Speak to someone. Talk to a mentor. Talk to somebody you respect in the business, or seek comment from people in trading communities. That may also go a long way to help you navigate that particular period. All right, at this point, if you are getting value from this video, you're enjoying what you're seeing in this video, go ahead right now and click that subscribe button. Subscribe to this channel. Go ahead, subscribe now. I'm waiting for you. You that you are watching. If you're watching my videos, you are not subscribing. Now it's time for you to subscribe. Go ahead and click that subscribe button now and click that notification bell so that you can be notified whenever I drop a new video. I'm waiting. Have you clicked the button? All right, so let's continue. Also, don't forget that you should also click the like button, like this video, and share this video to as many as you know will need this information, especially beginner traders. And most importantly, also drop a comment in the comment section. And don't forget, I offer mentorship services. You want to be trained from the scratch how to trade forex, from beginners to advanced technical fundamental analysis. I'm your plug. Reach out to me. You can see, you look through this video towards the comment section or the bio. You see details on how to reach me on WhatsApp so that we can talk about your mentorship. Let's continue with this video right now. All right, number 6 thing you need to do is to learn and improve. Always be a better version of yourself as a trader. That is how to stay relevant in this business. Review your strategy. Identify whether your drawdown is within expected parameters or requires a strategy overall. Now, you need to be very honest as a trader. Is your strategy working? That's a question you need to ask. Does it work on the long term? So if you consistently keep having drawdown, then you need to review your strategy, whether you need to overhaul the strategy or possibly dump the strategy and look for a new one, or if you need to tweak one or two things to make the strategy more effective. Sometimes you may need to just maybe remove one or two indicators or add one or two other tools to make it better. So look for patterns or mistakes that contributed to the losses. So what patterns or what mistakes did you make that contributed to the losses? You need to be honest with yourself in this area. The next thing you need to do under learn and improve is to iterate. Use lessons from drawdowns to refine your strategy and improve your risk management. See, for every losing trade you have, there is a lesson to learn. You're only learning how not to do it. So make sure you learn the lesson well and you don't repeat the same mistake again. you know and also you look at how to educate yourself. You see, it's been said many times, we don't graduate from the Forex University. It's a lifetime university. It's a lifetime where you keep learning, continuously learn about trading psychology, risk management, and market dynamics. I'm telling you, you are not going to graduate from this. Always educate yourself. Always learn the latest tools, the latest trends, the latest things you need to know about how trading works. Number 7 is you need to maintain a recovery plan. Yes, it's important. The drawdown has happened. So how do I recover? The first way to recover is gradual recovery. Avoid rushing to regain losses. Avoid it as much as possible. So avoid rushing to regain your losses and stick to your strategy and let compounding work. See, compounding is a very powerful principle. Every additional 10%, 5% you add to your account every month, you're compounding your profits and gaining more in the long term. That way you can have a gradual recovery process. Also, you need to revisit your goals. Align your trading plan with realistic performance targets post drawdown. This is very essential. And capitalize on opportunities. Use insights gained during the drawdown to optimize future trades. Like I said, there's always a lesson to learn each time you have a drawdown or each time you have a losing trade, and you can use the insight you gain during that period to optimize future trades so that such kind of experience does not repeat itself. So you can use the insight to gain during the time of the drawdown so that such kind of experience does not repeat itself again. All right, so that's the end of this video. If you have enjoyed this video up to this point, then go ahead, click the like button, share this video, drop a comment in the comment section, and most importantly, click on the subscribe button. Subscribe to this channel to receive top-notch quality content like this from me. And also don't forget to click on the notification bell so that I can be notified whenever I drop a new video. I'll see you in the next video. Don't forget, I'm a Forex mentor. You want to learn Forex trading from the beginning as a beginner to advanced level. I can train you, I can mentor you to become profitable. Reach out to me, go to the comment section. You see the link or right around the bio. You see the link to my WhatsApp number where you can get across to me to schedule your mentorship. All right, I'll see you in the next video. Bye for now.